Markets are in disarray, and today we'll be breaking down a little bit about where Bitcoin could be going in the month of September. Is it bullish? Is it bearish? I'll let you know. Make sure and stay tuned. My name is Paul Bear. Welcome back into Tech Path. I do want to thank our sponsor today, and that is iTrust Capital. This is a place where you guys can go out and set up your own crypto IRA. It's very simple, very easy to do. All you have to do is visit itrustcapital.com. And it's one of the places that you can start your own crypto IRA, or if you already have an IRA, you can also roll it in. So check out the way it works there with iTrust Capital. I would say this, obviously you always want to consult your tax advisors, your attorneys, whatever your tax position is. The key here is all of this is nearing now for a new taxable position for the year of 2024. So check it out now as we start to roll into tax season. Use the link down below. You're going to get a $100 funding reward if you decide to go that direction. All right, I want to go to a couple of points here. I want to hit on this first tweet right here from GR Dector, and this one is kind of interesting because it breaks down not only the week ahead, but there's one particular day I think you need to pay attention to. ISM comes in. This will be the manufacturing numbers. JOLTS, which is the Canadian rate decision. Most likely we're going to see a 25. That I think everybody is going to see the cuts of rates from their likely Fed services. But also the ISM services come in on Thursday. And then Friday is where the non-farm payrolls come in. And this is going to basically be the unemployment rate for the United States. This will be the first key data point that I think the Fed will really consider as to whether or not and how they respond at the FOMC for this month. So again, remember, we're expecting a quarter point right now, but we don't know what that could look like. Depends on how crazy this job report comes in as. S&P adds $5 trillion in market cap since August 5th. That to me is the unbelievable number considering the current condition of the overall economy. A couple other points right here. I want to get into Bitcoin. Price nearly hits almost 60K, but traders right now still looking at this as possibly a bearish September. And within this, there's a couple of points to highlight. Weakness around the monthly and the weekly close didn't last long. This is despite the holiday, but it spiked to its highs of 59.8 overnight. Going forward, though, many would want to see the monthly open bought by passive buyers on pullback. So we may see some of that in and out on Bitcoin, which simply means kind of that choppy sideways position through September. Going into the election cycle, I think that's the one that could really yield a different kind of scenario going forward. Other tweets I wanted to hit on, this one right here. September historically is the worst month for S&P 500. This is going back to 1950, so that's a long time to see that. Whether or not this holds, because I think we may still see some interesting times ahead. However, I've got a clip of Tom Lee talking about this, and you guys, we've seen many clips here on the show with Tom Lee. We're going to have him on the show, matter of fact. But he's normally very, very bullish on not only risk assets, but in general, what's happening with the S&P. Listen to what he had to say here.
What kept you positive was that the numbers were always, for the market, they were better than people were thinking. Is that going to continue to be the case? You're not worried about another growth scare like we had 6 weeks ago?
Yes, I think that the growth scare is what everyone's worried about, because the July jobs report was kind of a shock to markets, and that's part of how we had that Tokyo Black Monday. I think this jobs report for August is going to show a nice rebound for growth in jobs. Hopefully it's not too strong, because of course, as you know, if it's too strong, people are going to worry the Fed might backpedal on a September cut. I think investors should be cautious for the next 8 weeks. You know, September.
Next 8 weeks, be cautious.
Yes.
You're not always cautious.
That's right. When market's been up 7 of the 8 months this year, so we know it's an incredibly strong market, but we also have the September cuts and we have the election, things that'll get people nervous. I think in the next 8 weeks, people get a chance to buy. So I think it's good to be cautious, but just ready to buy that dip.
Yeah, so there's a lot of things there to unpack. One, of course, is Lee appears to think that we're going to see a stronger jobs number. And even if we do have a strong job number come in, I don't think it's going to be strong enough for the Fed to back away from a quarter point. Now, I'm more worried about the opposite side. If we get a jobs number that comes in stronger to the weak side, does the Fed get backed in to do something more aggressive, which of course I think would send markets into disarray? That would be the one caution that I'm looking at. Other things I'm looking at is still based on the liquidity wave that everybody kind of talks about that's coming to crypto and it's all going to happen. But we haven't necessarily seen it. However, there is a few indicators here that could start to push a few more people into the ETFs. And this, of course, is wealth advisors. And this is something that we're starting to see around the communities of investment, private investment especially. However, I haven't seen a lot of colleagues who have been talking about this seeing this kind of indicator. So this is a new one with Wells Fargo coming in with 1.7 trillion in assets under management. Not great, but it's formidable. But their wealth advisors now are approved essentially to recommend Bitcoin ETFs to its wealthy clients starting in September. This is pretty quick, pretty quick. So this could mean that if we do see a little bit of a pullback, maybe there are some key banks here that are starting to set up for this. But the ones I would watch again are, some of the traditional Bank of A, Chase is already starting to move in this direction. Maybe even some of the regional and even, some of the neo and or online banks like Ally. But those are the ones I'm really watching for right now because that could indicate some pretty big opportunities there. Goldman, though, is setting to lay off 1,800, more than 4% of its workforce. That's a problem, but I think some of this is still a bit overbuilt when you look at the fintech era and what has happened over the last 36 months. Profits, of course, surged 150% in Q2. Banker bonuses jumped 17, and stock is up 31. But yet at the same time, they're still figuring out how to downsize. And I think this is coming because of just in tech in general is changing the way in which banking is being done. They're getting more efficient. So that should be a good thing for some of the bank stocks for sure. Other things that are happening right here is the job numbers. These are the inflating job numbers that we saw already. The private sector job growth as percentage of total growth fell 38% in July. Remember, this was the lowest since 2020. That's the one that everybody was a little bit concerned about. Rightly so. The key here is we cannot have a number like this that continues to grow because then we could be in a spiral for jobs. And that is a problem not only for the Fed, but it's a problem for the economy. I don't necessarily anticipate that, but I do think that we're probably going to see a slightly softer jobs number versus a more positive job number. I may be wrong. We'll see on Friday as the numbers start to roll in. Other things that are kind of interesting, this is Arthur Hayes talking about the Fed rate cuts really are not helping Bitcoin. Now, as you break it down in the article, there's a couple of key points he hits on. Hayes pointed to reverse purchase agreements, repos, sale of securities with the agreement to repurchase them at a higher price, specific future date, noting that they're paying about 5.3. So yeah, that's going to perform better than what we're seeing in terms of treasury bills or even money markets. So that could be another safe haven for money to go. So money flows. It could have come out of these 5% that we start to see rate cuts on and flowing into these repos, or does it start to go into the risk assets? That's typically been the case as the bank rates come down, the opportunity for risk assets go up. And I think that we're still in that position. I don't know that people would be, sure, you're going to have, the traditional investors and the high net worth investors. They're probably going to be worth it to go out there and buy some repos. But I think in general, the average investor is probably going to go the route of, okay, I was in a money market. Now it's only paying 4.5. I can park it over here in USDC, get that, and I can also play in Bitcoin or Ethereum. So I think there's an opportunity here that might open up into the next bull run as we start to flow out here. A couple other things here I want to hit. Ethereum reserves on exchanges are climbing. This is sharply. And what does this mean for ETH? A couple of points they hit on here is the fact that we're seeing so much in the way. Not too long ago, we were seeing ETH evacuate exchanges. Now we're seeing a little bit of a turn. So here's the question. Let me know in the comments down below. Would you guys be in a position where you would exit Ethereum and look at another asset? Or is this just nothing to see here, not really worried on how ETH is going to play out? If you look at a couple of statements here, increase implies that more Ethereum owners are transferring their holdings to exchanges, possibly in anticipation for selling, especially if you look at the current state of markets. ETH has been one of the few projects out there that has not moved to the extent that we've seen other projects like Solana and Avalanche and some of the others out there, that a lot of the new tokens that have really taken off in this cycle. Other points I want to hit on, of course, here is Ryan Adams, who I would say is the Michael Saylor of ETH. Everyone is way too bearish on ETH. L2s are long-term for good for ETH. ETH is an incredible store of value. It's the root of trust for DeFi. and others are building, things like NASDAQ with API and all that. We've talked about and reported on this extensively that yes, ETH does have a core of what is the future of money and maybe what the future of the internet could be. And these L2s are definitely in a position where they could seek and do very well in the near future. But the fact that we are seeing a little bit of ETH starting to centralize is a bit concerning to me, especially on if you look at long term on ETH positions overall, because it hasn't been one that has been building. The other thing that you have to worry about is the economy. Is the American dream dead? Half of Americans now believe that the dream no longer exists, and this is typically a house ownership. 34% of people said that it is still attainable, down from 52 and 12. But I think here's the key: if you're looking at whether it's home ownership, business ownership, whatever it might be, I think the key is you just got to get out of fiat. You got to figure out a way to leverage up into something that doesn't depreciate at the scale and speed in which fiat is doing. And I think this is the challenge that a lot of people have, but here's the good news. The good news is that most of these kinds of investors are younger. They're under the age of 40. The likelihood of them moving into risk assets, I think, is greater than maybe ever before. So there's that, in essence, could be somewhat bullish. But if you look at it overall, the economy pressure right now and continuing stickiness of inflation still is a bearish position for September. Now, go back to bullish again. S&P 500 now adding 5 trill. This is on the market cap since August 5th. This is insane. That's 10% in 20 trading days. That's typically the return of an entire year. So we're seeing some things right now, and I think to Tom Lee's point is this next 8 weeks is very critical. And the reason it's critical is it all leads up to one thing, and that's the election. Once we have an election play out, then we may have a position one way or the other of how we're going to play the market for the next 12 months. And if you look at Polymarket right now, the election forecast still leaning in on Trump a little bit. Kamala's starting to fall significantly on Polymarket. So is this become a policy, her situation where she stepped away from innovation, issues on capital gains? What is it that you think is causing this? Let me know down in the comments below. By the way, if you're not subscribed to the channel, make sure and take a time, stop for a second, hit the subscribe button right now, and smash the like if you like these kind of videos where we break down kind of these bigger outlooks. Other news that I want to hit on is Qatar now bringing crypto rules framework into the Middle East, and I think this is going to entice a lot of new companies in there. It's also, I think, going to open up the Middle East to possibly see a new mecca, much like what we've seen in Asia and what we will see, especially as we see more and more countries in the EU start to go in this direction. Let's not forget that Turkey, just this last weekend, has now also applied to be in the BRICS nation group. So that's a pretty big statement, and everything is happening around us, but we're not seeing it happening here in the US. So I'm still very bearish on the markets in general, just because of that. Last up here is our friend John Deaton is now on primary day in Massachusetts. So he's got these two fellows that he's running against to essentially become the Republican candidate to face off with, there she has it, Senator Elizabeth Warren, the general of the anti-crypto army. So we'll see how this pans out for Deaton. Today, hopefully by tomorrow, we'll be announcing a little bit more of what's going on with the Deaton race and maybe how this might line up against Senator Warren, even though that is going to be a huge hill to climb. All right, if you guys are not, as I said, subscribe to the channel, hit it now. And of course, if you're not in our Diamond Circle, make sure and get in on that. That's our own private member group. It's a great place to communicate with me. I get in on the chats over there. It's very easy. We'll leave a link down below. Follow me on X @PaulBaron. We'll catch you next time right here on TechPath.